the war between Israel and Hamas and potential of additional supply from Venezuela has triggered uncertainty in the global oil markets after nearly, in fact, a havoc that was caused by Russia-Ukraine war last year. Now, while the conflict between Israel and Hamas, or the Israel war, has not had a similar sort of price surge or impact as opposed to what was happening in Russia-Ukraine, concerns continue to loom that Middle Eastern war and Middle East, that accounts for 1/3 of the global oil supplies, could further hamper if Middle East jumps into fray. Suyash, from what we are picking up, there is a constant upward movement, downward movement. The volatility continues, but the volatility hasn't really surprised a lot of people. Countries have factored that volatility in, and as far as it doesn't cross the $100 barrel mark, all is well. You don't have to worry.
In a global context, maybe $100 a barrel mark, but since we are net importers, I think the comfort really lies around the $95 barrel mark. Now, I was reading a report.
And it wasn't even touching, it's not touching that.
It has actually come down from, yes. After the war, we have not seen $95 sort of levels, but there are other factors also at play here, Shweta. Now, the demand from China which is one of the largest importers, I think it's the largest importer when it comes to crude, is also being keenly eyed by the street. Now, Q3 GDP data which came out yesterday from China was ahead of estimates. So that has also, added to that rally in crude. However, I was just looking at the crude prices before walking in the studio. I think it's currently hovering around that $89 to $90 barrel mark. So we have seen a slight bit of a correction since yesterday's spike. Now, apart from the Israel war, demand from China, then we have to also look at the production cuts that the OPEC is imposing. Saudi Arabia, which is which has imposed cuts of about 1 million barrels a day, and Russia, which has imposed a cut of about 300,000 barrels a day. If there comes a time, when they decide to raise a barrel, it will be raise a cut. It will be a big dampener for the market.
Okay.
And also,
since we have Vijay, and Vijay is one of the formidable figures when it comes to crude. Vijay, what are you making of the existing supply cuts by OPEC countries as well as Russia at 1.3 million barrels a day? Are these supply cuts likely to further go ahead into 2024? We know that they end by the end of 2023, which is December of 2023. If they go further into January of 2024, what sort of impact will they have on crude oil prices?
Shweta, I have somewhat of a contrarian view out here. I think crude oil markets are about geopolitics, politics, terrorism, military, some demand supply, speculative premium, financial premium. So I think there's a whole lot of bluffing going on out here. Look at the OPEC countries. They have either crude oil and natural gas, which you can classify as fossil fuels, or they have sand. Are they going to sell sand if they stop selling crude oil and natural gas? They can't. Do they need money? Yes, after COVID, everybody needs money.
Okay.
So what else can they sell? So even Putin, how is he going to fund his war against Ukraine? He's going to sell crude oil and natural gas. So they can cut output and create an artificial shortage, but they're not creating a huge spike in demand. That's not happening. Buyers are not banging on their doors asking for delivery at whatever prices they want to offer. Alternative supply is coming in. New kids on the block. Guyana stepping up its supply. Venezuela stepping up its supply. Iran selling crude oil on the stealth. Without country flag marking on their oil tankers, switching off their transponders and delivering oil in the high seas. So supply is definitely there. And like I told you last time in my last appearance, there is an alternate supply chain off the books, off the records in the global crude oil business. And that is flush with oil. I think you've already heard statements from Putin and Prince Mohammed bin Salman, saying that we'll open the taps if it is required. And Saudi Arabia is sitting on 3 million barrels of oil per day as spare capacity. If they need money, they'll open the taps.
Now, Vijay, I mean, as far as Russia goes, I understand they would want to keep that prices elevated to, build that war chest to fund the war on Ukraine. But at what point will Saudi, get uncomfortable? Because of course they want the prices to get higher, but the demand is only started to pick up, especially from China, as we have seen in the, the GDP numbers that have come in. So at what point do you think that, perhaps we'll see some sort of an intervention from Saudi?
Suyash, a few minutes ago, you were mentioning a threshold of $95 a barrel. And let me clarify, I refer to WTI, not Brent.
Okay.
Because we hardly buy Brent, right? So WTI tends to be trading at a slight discount to Brent, maybe $3 a little bit give and take. I think Saudis know and they understand one thing through empirical evidence, they're old hands in the game, that there is something called demand destruction and alternate fuels that come into play if the price of fossil fuels go high. Now, if at all you're going to rig up the prices by choking off supply and you're going to drive your customers away to alternate suppliers and alternate markets, that's acting your own foot. The shale oil business suddenly starts to become more viable. Wind and solar energy becomes a lot more viable. The oil sands of Alberta in Canada become a lot more viable. So the Saudis know that. I don't think they will allow crude oil to go at the 3-digit mark. I'm talking of WTI again. If it goes to a 3-digit mark, it will be more of a photo opportunity. And I say what I said last time. Given a 3-digit mark, I'll be fairly happy to short crude oil. Of course, I'm a patient man. I would wait for a couple of weeks or months, even if I have to. And I think this is a game of chicken going on in the international fossil fuels market. Unless Iran comes into the picture or dirty weapons like nuclear and chemical weapons are involved in this war, I don't see crude oil going and staying above the 3-digit mark for long.
Okay, so from what I understand, it's a very tricky situation for Middle East. They cannot create demand, at the same time they cannot continue to cut production. What are your expectations after what you're seeing in West Asia? Because from the Middle East's involvement, a passive involvement at this point in time, hopefully will not turn into active involvement. How is that likely to impact crude oil prices? I'm not asking you to be a doomsayer or a doomsday predictor, but from the existing geopolitical scenarios, a flurry of leaders from the British Prime Minister to the US President going to Israel, ensuring that the situation de-escalates. Are you hoping that there would not be a supply chain disruption? What are you making of how and where we stand geopolitically?
Shweta, not only am I hoping, but I'm also fairly optimistic about what's happening in the Middle East today. Look at how the Israelis are trying to make friends with the Saudis and vice versa. Look at how Israelis have got diplomatic relations back in place with the UAE and Oman. Last time I mentioned Saudi Prime Minister Netanyahu having a cup of tea at the palace of Sultan Qaboos, late Sultan Qaboos. Now they want peace. They understand that going forward, fossil fuels are not going to be the only game in town where revenues are concerned. Look at Saudi's Vision 2030, right? A big, gigantic city in the desert in Saudi Arabia and 120-kilometer long stretch where you're going to have modern facilities, you're going to have reforms where women are driving, etc., etc. This can only come about during times of peace and foreign investment. So I think most of the players in the Middle East today want peace. They don't want escalation of war. Not only am I hopeful, but I'm also optimistic this time.
Now, Vijay, I think WTI currently is hovering around that $87 barrel mark. At what levels, as far as WTI goes, will you be concerned in regards to domestic markets, since we are net importers of oil?
I completely agree with your figure of 95, give or take a dollar.
So for WTI, 95?
So the support level would be at 95 a dollar.
So I mean to extrapolate, I think Brent around at 97, 99, $2 to $3 per dollar that it's trading at a premium.
Yes, Suyash, if I'm not mistaken, you said at what level would I start feeling worried? I'm talking of 95 WTI, I would start getting worried if it stays there for too long.
Okay.
All right, 95 for WTI. This is where, and if it stays there for too long, this is what will get Vijay Bhambwani worried as far as crude prices is concerned. We're not there yet. In fact, we're far away from there. So nothing to worry is what I'm reading of the situation.
9%
right.
away from
right,
that
of course,
$95.
and hopefully we'll continue to be away from that number. But Vijay Bhambwani, thank you very much, sir. Always a pleasure having you here and listening to you on News 9.